Hi, Claire. Nice to see you. All right, so I'm resuming my share. Thank you so much for joining today. Such a pleasure to do these. I'm going to give a little bit of background on myself and She's Independent. But first, I will say that while today is a virtual format, we're really excited to do more hybrid and offline. And so follow us on Eventbrite, sign up for emails. Really excited about, putting good content out there and creating community. So we'll give a little bit of background first on myself. I have been come from a background in finance, and for some reason, my screen doesn't want to move. Bear with. All right, so I think you're seeing the bio screen. My background started in institutional finance, where I spent years on Wall Street, and I spent some of my early years also diving into early angel investing, and moved into various tech operational roles. Got back into investing, in the last couple of years, and it's been really, both fulfilling, rewarding, and interesting. I'm now very much playing in angel investing, where I have, really great track record, but I'm really focused on getting more women and, individuals that didn't have a path to angel into the space. I think we're all very aware of those power dynamics that exist, and we'll dig into it a bit. But just want to mention that, I've circled back into finance, and it's something that is both, I think, really powerful to play in, but also a space where I think we can make just a really big impact together. And I'm really open about, sharing my story and what led me here. And I think that when we really dig into the, why and why do we show up? What do we do? What we do? It creates this unstoppable thing. And so I have a few pictures, from my life and things that I wanted to share, but basically a lot of those Me Too moments and a lot of that, you can't do this, or, hey, we're going to throw something in your face that looks really unappealing or, really uncomfortable, and just finding my voice and having to speak up. Losing my mom, who's in the first picture, she did not feel or uncover her financial, confidence. And I think when you really start digging into that why, and you start applying it to things, it's just so powerful. And so that why, which is, not just breaking, but really getting, breaking through glass ceilings, but getting even beyond that into these deal rooms, into the investor room, into the, the boardroom. It's just something that I can't imagine doing anything else because of that journey. And, I'm so excited to be here presenting this, but also to be able to share that story of honoring, my journey and other women. And I think thinking, not just about yourself, but something bigger is something that we're probably all looking to do on some level, and thinking about, the women and the people that come after us, and how are we making this a better environment, a better path. So in terms of what we're going to cover today, we're going to talk about investments, and we're going to, introduce and cover some basic concepts, some more advanced concepts, but we can't do everything, in a 60-minute session. But we are going to dive into some of those basics. We're going to talk about things like valuations, maybe a little bit of kind of flags, what to think about, how to step into, an investor, headspace, and into equity ownership, even if you are not yet accredited or in a position to write checks. We're going to also walk through a bit of, basics of how angel groups work, a bit about how our group works. I run a group called She's Independent Investments, and we'll share a little bit more about that, and other forms of investing as well. So hopefully you will walk away today from this saying, I've learned something, or I've identified a gap, or I have, a path to, and, next steps to get more involved. Or maybe you say, this is scary. Pat yourself on the back for showing up, and, in 6 months, maybe I'll revisit this. But whatever feels good for you, we're not here to push anybody into investing, but it's really about making this accessible. So some of us are probably more aware of those equity gaps. I just wanted to pull this slide up. I think it's a really important one as a reminder of what those equity gaps and power gaps look like. First of all, I don't have up the wage gap, because even though we know that's a thing that exists, and, very much as a gap where, women and diverse individuals are receiving less in terms of, pennies on the dollar, these other gaps that I have up are significantly wider. The equity ownership gap, where last I heard, but could have gone down, 43 cents earned by women for every dollar earned by the male counterpart. meaning, in your equity portfolio, what you have ownership wise. VC funding, we used to hear it was 2.9 or 3%. Now it's less than 2% of the VC financing and funding last year that went to women-owned businesses. Atrocious. And by the way, if we're talking women of color, far worse. Board diversity, who's represented at the top of organizations, right? Glass ceiling, we're talking about that executive team. But what's happening on the board? What's happening in the investor rooms? These gaps are atrocious. And so why invest? Here, there's a million reasons to think about investing or pave a path to investing in the future when you're ready. But a few things that, I want to talk about are the knowledge gains, the network and the access that you get by playing in the space, career advancement you can map out and execute around. And then the mindset transformation and the authority that will come with writing checks or planning to write checks. And so a few actual examples, for my career and some things that I've negotiated around, and these were not all me writing checks. I have up logos from actual companies and actual boards that I've been on where I've navigated into ownership through my work, not always from check writing. And, what do I mean by investors get rewarded? Because it's very different than just being an employee. You get immediate ownership if you write a check. What does that mean? If you join as an employee at a company, and let's just say the standard employee, equity package, you're talking it's a year to get any vesting or any ownership, and a 4-year vesting schedule, meaning to get full ownership, it's 4 years in that role. If I write a check as an investor, that's immediate ownership. Wow. If I can get those funds and if I can allocate, it's way less time intensive, right? I'm not just pouring myself into that one business, but I can diversify my portfolio. I can get access to or, exposure to multiple businesses. Diversification, less time intensive, to write the check. And I'm not saying, the money comes easy and it's just something where you should just flippantly write checks, but there's less time. And so you can get exposure to these different businesses or allocate funds to women-owned or mission-driven, founders or businesses that align with where you want to invest. Real influence. How often or how many times in your career did you find yourself in a room and it was, well, they're checking a box, but they're not really listening, or I'm not getting into those conversations. I think I have authority, but I'm middle management. I'm entry level. I'm not really driving what's happening within the business. If you're an investor, if you're in those investor conversations and you're telling them what you actually need to see for the business, at She's Independent, when we're thinking about or evaluating if we want to write a check and we're not seeing diversity or representation on that exec team or on the board, we talk about it. And we say, this is a mandate. This is a requirement that you're doing these things, right? Have real influence. And then professional growth, whether it's just the skill development, the learning, buying a board seat, right? There's so many opportunities to really be rewarded by stepping into that investor seat. And so again, there's a million things we could talk about. This is going to be covering some of the bases. If there's anything I'm saying, you have questions, comments, I welcome them. It looks like we do have a question. Does this mean by investing in early stage companies, you can get a board seat? Great question. Sometimes yes, but not always. But there are a lot of conversations that you can start. What does your board look like? I'm interested in board seats. Is that an opportunity by writing a check? Can I land that board seat? A lot we can talk about there. But yeah, it's a conversation. Yeah, absolutely. And I do know people that are writing checks to land board seats. And especially for early board seats, that might be a nice way to feel more confident or say, and I want to get this experience, on a paid or for-profit company board, not a nonprofit board. And maybe that's the best way to leg into your first role. Also, you could do, advisory work and other ways to nail equity and ownership. All right. So what is equity, right? Because when we hear about equity and we think about things like DEI, it can mean a lot of things. Ownership is what I'm listing first, because in the premise of, today's discussion, I think a lot of what we're talking about is ownership. We'll talk about the different instruments or ways to get exposure, but it's basically being an owner in that business. It's participation and upside. If I'm an equity owner, let's just say I'm an employee and I got, shares to the business. They're going to give me some valuation, when I'm onboarded, some strike price if it's options. But ultimately, if the business does really, really, really well, maybe there's this jackpot scenario, right? Maybe they go public or they get acquired, then you can get paid out. Participation and upside. It's not just getting paid for that day-to-day work. It's if that business, does something and really outperforms and gets some big valuation, you get a say in that. You get a check, you get liquidity, whatever you want to call it, you get to participate in that upside. It's a possible liquidity event. And liquidity event, and I know people aren't asking all the questions, but will I actually see any money? Will I actually get paid out on the paper gains or, whatever they're telling me it's worth? A liquidity event, they get acquired, they get sold, whatever, they go public, means great. Maybe I now get my cash out. I get actual dollars. I say possibly a possible event because a lot of times these companies can be worth nothing or not have a liquidity event for years. Or maybe, you didn't exercise your options and you're no longer, participating when there is an event. Possible liquidity event. And the fourth point, which I think people really should think about if you're thinking about negotiating and thinking about being strategic with what your packages look like, because we want you to understand how to get into a good equity package as well, it is likely cheaper for the business to give away than cash. So if they're offering you equity ownership, it is cheaper for them to give away. So if you're, negotiating, and by the way, we have a negotiation session that we're going to host next month where we talk a little bit more in detail about those types of concepts. Really important to understand that. All right, so let's talk a little bit more about investments. What are we focusing on, when we talk about angel? So I have up here a few examples of, different asset classes and different ways to invest. We're really going to be focusing on private companies, private investments today, and not just private investments, but in terms of angel, we're going to be talking about earlier rounds, earlier stages in financing. Why? Angel means, maybe I'm writing a check or we're writing a check as an angel group, but if this company is really mature and has a really big valuation, you'd need a pretty big check to have sizable exposure. So if we're writing a check as a group for 50,000 or 100,000, or I'm personally writing a check for 10 or 5,000 or whatever it is, if the valuation is 100 million, that's negligible. But if the valuation's 10 million or 5 million or whatever that angel round is valued at, you get actual exposure to the business. So understanding a little bit about the ecosystem, stages of financing, types of financing, who are the different players and what are their, what are they incentivized to look for, or what do they do, once they join as an investor? Do they add value? What are the goals of the fundraise? These are concepts where we could talk about them all day long, but really just introducing some of these ideas. But understanding, for example, stages of financing. If a company says we're in a seed or seed plus, these are early. Or friends and family, it's probably really early, right? And they may not have any revenues today, and that's okay. But understanding the stage, if they're a series A or B or C, and these are all kind of these, as they're raising more money and likely, raising at higher valuations and more established in terms of what they're doing, they're going to go through these progressive fundraising rounds. As an angel, where are you playing? Our angel group is really focused on seed plus. So as an example, right, we don't want it to be at the idea stage. We don't need revenues, but we want there to be execution. If I invested a series B or C and I'm not writing big checks, it's not going to be that sizable in terms of, what I'm going to get from the business. It doesn't mean it can't grow from there, but just understanding, what type of raise, what are they doing with the raise? And by the way, goals of the raise. We'll talk a little bit about this being a bear market or a down market, but basically, with the market doing what it's doing and people being a little skittish on funding, okay, well, what's happening with, valuations and what does their runway look like? How long can this company, pay its employees And if they have trouble fundraising in the next 6 months, do they have a plan, or are they going to, implode? And so there's a bunch of different investment instruments out there. Just to give you a quick idea or run through: shares or restricted, stock units, RSUs. Those are not what we're going to be talking about today for the most part. Options, again, something where if you're understanding how to negotiate, your employer equity package, really important concept. We're not going to focus on that today. Convertible notes and safes. Those are instruments or ways that angel investors are often getting exposure to the business. Or a priced round, meaning we are raising at $10 million and this is how many shares you get, but it's called a priced round. So I guess shares, convertible notes, and safe notes are typically those structures that we're seeing as angel investors. And by the way, if you want to play and you want to learn about these things through actual deal making and being a part of it, you can learn, as much detail as you want. Thanks, Rachel, for dropping something in the chat. All right, so we will talk a little bit more about, some of the investments we've made, and happy to go into more detail. But why invest as an angel? And we already kind of talked about this a little bit, but a little bit, a different way to think about it, or a few more points on this slide. The skill building and informed decision-making that you can navigate into through angel investing or participating, even just learning, even if you're not writing the checks. We have a path for people that are not yet accredited that want to learn. Learn what to look for, right? Don't accept an equity package because they're like, okay, this is what you get. What is it valued at? What does that mean? What is the market doing? Would I work as an advisor for free or, for equity for 6 months or a year on those terms? Does it make sense? Have I de-risked or thought about, that company? And do I even want equity in that company? And all day long, you can ask the questions, but until you start thinking like an investor and you can have a more informed decision-making process around the million variables that exist, you're not going to be in a great position around negotiating or aligning or finding those, and landing those roles. The access and influence, I can't, overstate how important that one is in terms of the power gaps that exist today. And I love seeing, women stepping up and showing interest, even if they don't have any background in finance. Love it. You can transform the way that you show up and reinvent not only, a career if you want, but your mindset. And again, just the way, your authority, a path to the boardroom, as Jessica asked about, by showing up as an investor. And so really tremendous opportunity that I can't overstate. Let's talk about valuations for a second. So I have up a picture of tulips, the flower, right? And I use this example because coming from a finance background, it's one of those examples that you learn about and you're like, wait, what? This doesn't make any sense. But back in the Netherlands in the 17th century, you literally had tulips, the flower, the bulbs trading at these inflated prices. And this was what we call kind of that first financial asset bubble. Meaning, the value that was being reflected in these assets, the tulip bulbs, it was this inordinate sum, right? People made fortunes and they ended up having, bankruptcies through this adventure, because at the end of the day, what is a valuation? People viewed this as an exotic luxury, in the 1600s. And similar to how somebody might, look at an NFT or, have some asset that they're like, oh yeah, we think this is worth $1 million. And one day it might be, because that's what somebody's willing to buy or trade it for. And the next month or day, it could be worth next to nothing. And we've seen that, again and again, and cycles happen. And so basically what I'm trying to say is valuations are somewhat meaningless based on a story, based on investor supply and demand. And it's a little scary, right? But if you understand that and you can unpack some of these things and, understand when there's a little bit of mania and say, well, what are the underlying fundamentals? And is this something I really see a market or I can get behind? You can feel that much more confident in terms of how you're allocating or how you're thinking about investing. And cycles happen. And I know I quickly grabbed this image of a bear, you know, and the definition actually of a bear market, you know, would be a 20% decline of, you know, stock prices and, you know, some other things that traditionally would be called a bear market. Whether or not it's a bear market or a bull market, or, you know, sentiment goes negative, as we've seen, you know, investors are pretty scared and funding, you know, is dried up and valuations are lower. Don't be scared out of the arena. Right? Valuations down, it happens. Do you want to know what also happens? More sophisticated investors and people that know what they're looking for, they're finding great opportunities. Because guess what? Maybe now there's, you know, higher quality companies in market, not able to close, and, you know, you're actually able to get the look. The valuations are down. Maybe you're getting in at a better entry point. And it's this counterintuitive thing, right? But when you're scared, it's actually usually a good time to invest. And again, I'm not sitting here and telling you, go invest, you know, all your assets or go do something that's too scary. You should, of course, talk to your financial advisor, you know, see what your position looks like. But recognizing cycles happen and that can present opportunity is a really important thing to think about, right? Panic, pessimism, you know, these are things that happen. So I mentioned a little bit earlier, but, you know, you might want to change the way that you're looking at these companies when the market is not feeling as solid, or, you know, funding is not as easy. You know, are they evolving their plans and execution? Maybe they had a really big burn and they still have a big burn, and it's, you know, a year in or 6 months in, and you're like, what the crap, you know, what are they doing? What is their runway? When are they going to run out of cash? What are they doing about that? As our investment group looks at, you know, investments and checks to write, if we know that we're only going to come in for maybe 50 or 75 or 100,000, and they're in the, let's just say the round is, you know, $500,000, and they're, you know, having trouble closing that round, and their burn is, you know, really high, what's our check really going to do? We don't want to write a check where they're just going to implode. You want to be smart about that allocation of capital, where you're putting your dollars. And again, just very quickly glossing over this, this is something we would spend more time on the negotiation discussion if you want to join that one in April. But understanding, you know, what is the equity? And if your employer, as an example, is offering you an equity package, or I should say an options package, because that's often what we're, you know, presented with, maybe RSUs, but an options package as an example, do you understand these terms? Because if you don't understand them, there's no way you can negotiate them. And by the way, to understand what is the likely valuation, you know, how to talk about these things. If you start thinking like an investor and playing like an investor, you're going to be in a whole new ballpark of the types of packages you can land and negotiate into. Because if you're logical and you know what you're doing, they're not only going to be impressed by you, but you're going to logically be able to say, and this is why I need this. And they're not going to be able to, you know, back down, or you can identify that's not the right opportunity. And in terms of understanding, you know, ownership, what you can expect, expectations, what you can leg into, there's a lot to think about. But again, where are they in terms of their funding journey? How much traction do they have? What role are you stepping into, right? Again, these are concepts we would dive into further if you wanted to on the negotiation discussion, but just really important things to think about. And if you're newer with equity ownership, or, you know, being an investor, you don't have to necessarily write a check, because if you can leg into, or, you know, negotiate into it a sizable, you know, package with an employer, that's still equity ownership, whether or not you're writing a check to get there. And there are a lot of ways to think about, again, those valuations. You can look at places like, you know, whether it's Crunchbase and see what they've raised, or you can ask, you know, what was that valuation round? You know, where did you raise at? But a lot of ways to leg into what is that valuation when there's an actual round, meaning, you know, the company goes to market and they're raising from maybe, you know, angels, VCs, you know, different players in the investment ecosystem and world. They may do it at a price round. So have, again, this is an $8 million valuation. So it's a clear cut. Okay, it's 8 million. In actuality, right? It's really based on a story, and it's really not likely going to be, oh yeah, we have $1 million in revenues and this is our, you know, multiple. You know, at early rounds, a lot of times it's really about the story and the opportunity and when you're investing. Anyway, we can spend more time talking about valuations, but let's talk a little bit about angel groups. Let's talk a little bit about, what does it look like? Do angel groups, align for you? And there are a bunch of different ways to invest. But we'll talk about angel groups for a second first. So first, are you a qualified or accredited investor, right? To be an angel investor or to write a check into private company investments, and I'll use the US SEC, Securities and Exchange Commission, requirement, you have to be what's called accredited or qualify. And so it's basically this, have you made at least $200,000 over the last 2 consecutive years, or do you have $1 million of net worth, not including your primary residence? It's a little bit different if you're a couple. And if you're not qualified or accredited, can you still play? You can't write checks, but in our case, with She's Independent as an example, we have a path for those that are not yet accredited that want to learn. What is carried interest, right? What are the fees? What are the dues? So you can write a direct check, meaning Natalie is writing a check for $10,000 or $25,000 or whatever it is. Oftentimes direct checks, unfortunately, are going to have these, higher minimums. And so it's pretty tough, especially if you're newer. Are you going to want to write a check for $50,000 or $100,000? Or can you? Probably not, right? Or maybe it's something that doesn't even make sense if you can, because there's so much learning that happens early on with angel investing. But when you are investing alongside others, there are typically these costs or dues that happen because there's all of this legwork that goes into creating, the investment vehicle. And in our case, right, we're educating, we're doing a lot to make this stuff accessible. In our case, we're trying to make this not only accessible, but we're trying to make it something that's very efficient. And we don't want to take advantage of people that are investing through us. We are mission driven at our core. We are, looking for alignment in terms of the companies and the cultures that we're investing in. We want to make an impact. And so the carried interest, or the, let's say, take, that we have is 18% when we form what's called a syndication or a group investment vehicle. I know other angel groups out there charging 20, 25, and 30%. Let me say that again, 20, 25, and 30%. And so thinking about, how much am I giving up, right? When I invest through a group, it's really important. And what are you getting through that group? You're getting deal flow, expertise, all these things. So carried interest, yes, it's basically the fee that's taken out of, does the investment perform? So Jessica, we're not actually taking it and saying we're taking dollars and putting it in our pocket up front. We're saying if we invest $100,000 as a syndication, and let's just say it returns a 3x, so 300,000, ultimately 18% of the proceeds is the carried interest, meaning what's going to us. The 18% also is shared because we're very, member-led and really excited about, helping others and supporting others in their journey of learning, but recognizing, we're really excited about this experiential learning and getting other people into leadership roles. We're actually sharing the 18%, where let's just say Rachel sourced the deal. She actually runs deal sourcing for us. Let's just say that Jessica, ran diligence, because I know, Jessica, you have a finance background. Let's say Claire, did some amazing work around ongoing relations with the business after the fact. So we're actually sharing, and we're not just taking this, but we're actually sharing that 18% for people that are doing things to support the group. And we had a few questions in the chat, so I want to make sure we're getting to these. Can you be a part of more than one angel network at a time? Absolutely. Great question. And some have costs upfront, some have really heavy embedded costs, like 30% take. You want to understand, what are the costs? What are the structures? What are you getting out of them? I've been in a lot of groups. Well, I've been in a lot of financial organizations, and it's a lot of white men. And I'm upfront about that, right? There's a reason I'm here with a bunch of women. And there's a reason I'm excited about supporting women that also don't have the money today. In those groups that are, doing what the status quo was for many years and didn't have any gender diversity or representation on those deal teams or on the leadership teams, even if they're like, oh yeah, it's trendy to, support women, or it's Women's History Month. Are they actually showing up, right? Are they actually doing the thing to make it a safe space for learning supporting people who don't have the background, we are operating at a high caliber, and we're really excited about really, transforming people's journeys. So I would say that. Another question, can you explain what a limited partner is? Absolutely. So if we were a fund, so there are venture capital funds or private equity funds, and basically you are a, professionally managed fund, and you have the GPs or the general partners that are the ones that are, managing or handling and doing all the things around investing. And then you have LPs or limited partners, and they're writing checks into the fund. And we will talk a little bit more about this later, but it's a great question, right? What's the distinction? If I have my assets with a financial player like Schwab or Fidelity or, some brokerage, I may have a financial advisor who's determining allocation decisions on my behalf. I may also say, you know what, I want to write a check for $250,000. Unfortunately, oftentimes a lot of these funds, they're high, into this fund, and they're going to make investment decisions around allocating into these private companies and their thesis and, investment, the investment profile that they go for. So I'm an LP in that fund. I can also be an angel. And so I can empower myself if I want to learn the skills, or just, invest in things that I think are really impactful, such as, women run businesses as an example. And by writing those checks, I am an investor and I'm an angel, versus I'm an LP or an investor in those professional investors. And by the way, I think they're all interesting paths, and there's all a time and a place, but the transformational experience and what you get in terms of the confidence and the skill building when you write the checks, and we've heard this directly from our members again and again, it's huge. So that's why I'm a huge fan of our member-led, angel investing experience. We may do funds at some point. And by the way, we're partnered with some other funds that are amazing. Emmeline Ventures is an example. Naseem Sayani, we interviewed, and we can, share that interview if you like. She runs a fund, and she got into, fund management and investing, a little bit later in her career. She's amazing, and she's doing things to impact women. So you can, write them a check, and she accepts smaller checks, for LPs. And then another question that we got in the chat was around carried interest. And the question was, is that fee not something that happens until a liquidity event? Correct. So it's basically the payout structure that happens if we get paid out on the investment. And so somebody else was asking 18% of what? One more time, if we invested, so I was saying if we invested 100,000 and then there was a 3x return, so we got 300,000 back, I was saying the 18% is out of the 300,000. And then another one, in your scenario of investing 50,000 as a group, how many people are contributing to that? Great question. Let's talk about check sizes. So our group will accept checks as low as $2,500 for a first-time investor. And with exception, you can invest $2,500 beyond that, but we like 5,000 minimum beyond that, just given the amount of work that goes into it. I would say on average, probably about $5,000 to $7,000 per check. We have a lot of early investors, a lot of people investing for the first time with us. So we have a lot of smaller checks. And then we have some people that might write a check for 50 or 75 or 100, right? So it's really, I think, as we evolve and as we get more women, up that, skill ladder, where we have 80 members today, half of those are investing members, as these women become, more confident in check writing, we're seeing the check sizes grow. So I think over time it'll go up. But yeah, we're seeing, sometimes 5 people might invest in a business, sometimes 3, sometimes 10. So it really is, just based on alignment and, who wants to participate. There is no mandate or requirement that people are investing when we are evaluating a deal. It's member-led. Do you want to invest? We give full transparency. And we don't say to you, you should invest because. We're not giving you the recommendation. We're saying, here's a bunch of resourcing. This is why, we're excited, but we're not actually telling you, you should invest because X, Y, Z. It's something where you ultimately get to make those decisions, but you get to learn alongside us, others, skilled individuals that have already done this, for years. Great question. What percentage of our portfolio has had liquidity events? Love these questions. So the investment group, we actually only started a year ago. I have a really interesting track record for my early investments. I've been angel investing for over a decade and been in institutional finance, before that even. And I have, some ridiculous returns, which I would never promise or say these are representative, but I have an over 20x return on average for my first 4 investments, across my first 4 investments. And 3 of those had liquidity events. So we just started investing a year ago, which is exciting. We allocated over $500,000, and, on average, private companies are actually, unfortunately, take a little bit of time to exit, fortunately or unfortunately, but it's interesting. On average, companies that don't have women on the executive team, it's over 8 years on average for them to exit. And with women ownership, it's actually 7+ years to exit. So if they started 2 years ago and then we invest, we might expect around 5 years until there's potentially a liquidity event. All right. So back to, what we were talking about in this slide, which is, what's the focus? What's the leadership look like? If we're talking about an angel group as an example, do you care about mission driven? What are you looking for? But there's a range of participation. And I love these questions that we're getting, but the ability to maybe participate passively and learn, or, more actively and actually step in. And if you want to do diligence, or if you want to run, a screening call, these are all things that we welcome in our group. And, a few tips to think about, how should I think about hacking success or get to success? You can start navigating into that equity before you're accredited. Again, maybe it's an advisory position or a board role. Maybe it's just employee ownership. But start thinking like an investor and start navigating into this, even if you're not accredited today. And if you really want to learn the things, right, it's literally by doing. Theoretical stuff, I can show that to you and we can talk about it, but it's very different. When you're in the driver's seat and it's, all right, now what do you want to do? That's when the real game starts, right? That's when you really start learning. And by the way, our group is holding, more advanced discussions around why we did invest, why we didn't invest. We actually have a member event next month where we're going to dive and, pick apart some of the investments and talk about deal rooms and data rooms. But truly, just by getting involved, every time we look at a deal, those are a bunch of data points and a bunch of levers and things that you can learn around. Why did this business do this? What didn't work for them, right? There's so much learning opportunity. And I just love the learning alongside others, because there's so much to learn and so much that you're not going to know, right? So do you have experts in this industry, or has somebody already seen that? By putting a bunch of brilliant minds together and by having people that have already done it before, hopefully you have less of those write-offs and losses, right? But don't expect that these investments are going to always return something. Expect that if you're smart and if you're diligent and if you're looking at good deal flow, not the negative selection stuff where your Uncle Vinny says, oh, I know somebody doing this business, I need some money, really looking at good deals and really asking, the tough questions, you can expect to get some type of return. I'm not going to promise you that, but you can expect it. But these are risky deals, right? When you're angel investing, this is early on in their cycle. So you can't de-risk everything. And that's part of why you get, good upside potential, because it's risky. So a little bit more, just to mention about the group, but 80+ members, in our group, as an example, we're predominantly women and first-time check writers, really mission-driven. You can use, tap into employer L&D dollars, learning and development dollars, for the observer membership. There are ways to get you involved in this where it doesn't feel like you're just, draining your bank account. And again, we have really reasonable rates, but there are ways where you can learn this and it will build your skill set and build your credentials. We also have sponsorships available. So if you follow us on Instagram or, LinkedIn, we have this link in a few places, but you can actually apply to be sponsored as an investment observer. And a little bit more about, the portfolio, because I know that there were some questions about it, but we have up some of the logos here. As an example, Lion Pose. These are, women who've created clinical skincare for people of color. And they went through a really prominent accelerator program and we invested, and it's early in their journey. Just one example. Kid Kaboo. safe for kids Uber concept. And we absolutely love that founder. She has been so outspoken and supportive of us. She's amazing. But, investing in these businesses where we're seeing the impact and we're seeing the mission and the drive behind what these founders are doing. And something that we do is we're interviewing and we're, having these conversations. So it's not just about, well, this is investing, why you should do it, but educational events to say, here's a conversation with, the founder of KitKaboo, or, the investor that I mentioned earlier, to really talk about, deep insights, not just that surface level stuff, and talk about why we're doing this. Okay, we've gotten a few questions in the chat. So let me back up a little bit. So one of the questions was, does angel investments work in the Spanish market? So we've invested, first of all, we have investors all over. We have an investor that just joined us from Japan. We have some investors in Canada and investors in Europe. We might define, accredited investor requirements based on the SEC requirements if we're investing in US businesses, but we've invested outside of the US as well. So we've done some investments in Israel as an example. We're happy to look at investments in the Spanish market. I think it's really about deal flow. It's really about, can we get behind, can we understand that market and that thing? And by the way, sometimes you'll find businesses that are outside the US that really want to sell into the US and into the States. And so we could be great investors. We're open to deal flow. Rachel Mehta on this call, Rachel, Rachel at she'sindependent.com. I know loves deal flow. We have a whole process where people can submit if they're looking to fundraise. Happy to look at it. All right, another question. How long is it typically from starting to learn about an app to closing the round, or an app to closing the round? Great question. We have a quarterly deal cycle. So every quarter, we basically are doing all these things to curate and come up with this list of companies that we've identified are quality enough and aligned enough that we may want to invest in them. And we also have voting mechanisms where our investing members can, give preference and say, hey, I have interest in this, or I don't have interest in that. We're typically seeing, call it, 4 to 6 weeks where we're funding the investment after the pitch. Diligence might take a few weeks, but, funding, knowing we have a lot of members, it's a process. If something moves faster or it doesn't meet that typical deal cycle, we've also done some off cycle. Sometimes we've moved rather quickly on off cycle if they look, really high quality. So I'd say there are exceptions to the rule, but we run a quarterly deal cycle. And as an example, right now I'm already going to be saying that, wow, it's a much longer deal cycle this time because we ran our pitch event in January and we're actually now at March 9th and just about to fund a deal that pitched us in that cycle. So that was a wider one, right? Or a longer timeline. And then somebody asked, what are employer L&D dollars? So basically a lot of employers, a lot of those corporates that you're working with will have learning and development budgets. And whether or not you're using them, you should. But as an example, you can apply those dollars towards educational or resourcing to help your professional growth. And so the investment observer role that we have, that's $375 a year, where you do not need to be writing checks, but you can be learning, or even, arguably the investment role. We've seen some individuals apply their learning and development corporate spend dollars towards membership, because we're doing truly educational events every week for members, not always external. And then love that, Jessica. Do members have a say in what missions they want to pursue? You absolutely have a say. You have a say with your voice. You have a say with your wallet. We have a member, and I love this. She was outspoken, and she's, a woman that said, well, hold on a second. I'm not going to invest unless there's real representation on the executive team, and there has to be a woman, there has to be diversity, and they have to have real ownership. Right? And some of the businesses we've invested in have been men, but we made sure that they were, mission aligned, and they're hiring and investing senior women or executive talent. And we made sure they were aligned with us. But we are actually talking about developing these kind of mandates or metrics to say, well, last year it was 60% women owned that we invested in, but We want it to be 90%, or, women need this much ownership, on the executive team, making sure that we're really making a difference. But in terms of missions, I mean, we've really also leaned into, I think, or seen that our members have had interest in, clean tech, environmental and sustainability, some healthcare plays, businesses that support women. So again, by, allocating dollars and saying, well, this is where I have interest, absolutely, they have a say. Great. So I'm going to move on to this slide, which is a really important one, which is the reminder that this stuff really is risky. Do not expect I'm going to see cash flows in 2 years or 3 years or 5 years. Expect access, expect learning, expect opportunity, expect, great things, but don't think of this as a real estate, income play. Right? But it can be an amazing, kind of jackpot potential thing to unlock. But no matter what, you're going to be learning a lot and you're going to develop great community. But just really important to think about. And there actually was a slide that I think we skipped over. And so my apologies, I'm going to go back a few. For some reason, you know what? It's not in this deck anymore. I guess we made some changes. But basically, it was going to compare us to other forms of investing. And I think that experiential learning element of what you get with us, it really is unmatched. Meaning, if you want to play and you want to learn and you're, inquisitive and you're curious and you're new at this, I really think we're unparalleled in terms of how we approach investing and how our investment group operates. There are a bunch of great mechanisms, and I'm not saying don't explore being an LP in funds. I'm not saying don't explore, other pathways. But we'd love to, chat more. And we're actually hosting an office hours next Thursday, where if you have membership questions, more questions around what was that carried interest again, or, how do I get involved in this? Or let's talk through that investment you made, or I'm curious about this. Happy to answer it. It's really an ask anything. And then we're also going to do a negotiations discussion around equity ownership next month. We had to actually reschedule it because I have an upcoming surgery, but that's going to be rescheduled to April 27th. And that will be hybrid. And so we will have virtual. We love, the online component, but we will also offer it offline for anyone in Colorado. If you want to come to this Boulder space that we are partnered up with, happy to have you there as well. And so, we're just really excited about getting more people involved. So please, if you have questions, thoughts, feedback, we would love to hear from you, but that's what we had prepared for today. Love the questions. This was a very, very engaged group from the questions, so I appreciate it. You're quiet. Are you thinking about the next investment check you want to write? Have we scared you about the risk? Hopefully, but not too much, just a little bit.
Thanks, Natalie.
Yeah, absolutely. We have a question, is there an application process? So right now there's not an application process. It's really, if you have interest, you can get involved. There is the requirement, if you're going to be an investing member, that you have to be accredited, but it's a self-accreditation. You check in a box saying I'm accredited. And it doesn't take a process. It's truly a, based on this definition, check the box if you are accredited. But again, you can also be not accredited and be on that learning journey and be an investment observer. Thanks so much for mentioning all this in the chat. And Selena, if I'm saying that correctly, you are more than welcome to reach out, and we'd love to see you at office hours. But my email is natalie@shesindependent.com, which is up on the slide. Great questions. Oh, wonderful. Well, I'm so glad that we're still getting more messages, but I'm so glad y'all joined today. And hopefully we'll see some of you in the group. And Claire, I know I owe you a message. You being local and very plugged in, we're comping you as an observer, obviously. Thank you so much. All right. Well, this was such a pleasure. Hope to see some of you at office hours next week. Bye. And make sure, if you want to get the recording, sign up for the emails, opt into the emails.